Hello traders, and welcome to this video analysis looking at the euro. So traders, I just want to go over what we're seeing in today's markets and why the comments from the Italian Deputy Prime Minister may be the key fundamental driver that pushes the euro higher across the markets and erases the losses we've seen in the euro over the last 2 months. So traders, as I've been explaining, we've seen a weaker euro across the markets in the last 2 months. This is being driven mainly by the Italian and EU conflict over their 2019 budget. As I've explained in other videos, traders, the the Italian government wants to raise a budget deficit that they feel will help their economy grow because they're going to reduce taxes, give people money to spend in the Italian economy, reduce the retirement age, and some key structural factors they believe that will boost Italy's economy and help it get out of this stagnant growth phase that they're currently in at the moment. Now, the only problem to that is Italy is already the second most indebted nation in the European Union after Greece, and we all know what happened to Greece in 2015 when they had the huge financial crisis, when they crashed and defaulted on their debts, and it's caused a lot of problems in Europe, destabilized the European economy. So of course the EU Commission doesn't want Italy to do this type of budget because it runs the risk of them having the same situation as Greece, and that's going to be very detrimental to the European economy. So as you know, the EU have rejected their last 2 budget drafts and said that it's not good enough, you need to reduce your debt burden. And the Italians have been, up until today, up until the weekend, traders have been very defiant and saying, no, we're not changing our budget, we're not going to change our rules. And the EU Commission has been clearly saying, well, if you don't change your rules, you run the risk of us sanctioning you, fining you, hitting you with penalties for not obliging by the rules and regulations that all EU member states must follow. So over the weekend, traders, the Deputy Prime Minister said for the first time they're willing to talk to the EU about what's been happening with the budget, and basically signaling they could potentially look to reduce the amount of debt that's in their budget at the moment. Now, this could be a very good big breakthrough, traders, because if the Italians do follow through with this and start to talk to the EU and admit that their budget is too high in debt and their forecasts for growth are too optimistic, the recent selling we've been seeing in the euro will reverse and push higher in the markets. Now, we must remember that the selling has been due to the Italian political budget, but also the euro has been weakening on recent economic data out of Europe showing the European economy has been slowing. But this is not just the European economy that's slowing, the Chinese and the Asian economies are slowing, and it's being driven by the US-China trade war slowing global growth in the markets. So why I decided to buy the euro against Swiss franc, traders, is easy. We understand that the euro is Switzerland's main trading partner. We understand that Switzerland's central bank, the Swiss National Bank, has been saying on multiple occasions they are committed to keeping the Swiss franc weaker against the euro long term, because they don't want this currency to get too strong, because Europe is Switzerland's main trading partner. So a large majority of Switzerland's exports go to Europe, and if the currency's exchange rate, if the Swiss franc, is weaker than in the euro Swiss franc exchange rate, this means exports from Switzerland to Europe are cheaper for European consumers, so more money can flood into Switzerland through export sales to the European Union, and it's going to help economic growth, investment, boosting prices from the higher demand for their exports, and raising inflation towards their 2% target, which they've been struggling to do in the last few years. So this is why I've gone long this currency pair. Let's see how it plays out. Remember, the European Central Bank is forecast to end their quantitative easing bond purchasing program in December and then raise interest rates in the summer of 2019. If they do follow through with this plan and end their QE program next month, and also this Italian political situation fades, the euro has been forecast to really rise higher in the markets, because investors will start to place bets on the euro, and because they'd rather be in the beginning of an interest rate hiking cycle in the European Union than not be in a trade for the euro, if that makes sense. We all know interest rates drive the value of a currency, and when QE is stopped, the reduction of the supply of money, of course, means that the value of money will go up, because there's still a high demand for euros for investment, etc. So let's see how this plays out. Let's see how we trade this. Got a target of 1116. Personally, I'll probably hold it up to 1118 as long as the ECB does follow through with this plan. The only risk to this trade not working out, traders, is this: does the Italians turn around and say, okay, actually, we're not going to reduce our budget, and does that cause more conflict with the EU? And does the European Central Bank not follow through with their plan to end QE because of the recent slowdown in data? Now, one more thing, traders, the reason why markets are so nervous about the Italians being defiant against the European Commission is that if the EU pushes Italy too hard, Italy may turn around and say, do you know what, we're going to push for a referendum on our membership of the EU, similar to how the UK did. And if the EU was to leave, if Italy was to leave the EU after the UK, this would leave only France and Germany left in the EU to really drive the economy. And they're saying that with these two countries only being two small countries compared to the whole European bloc, then it's not strong enough to keep up the European economy, and the Eurozone could collapse, and there could be the end of the Euro as a single currency. And this is why we see so much weakness around the Euro based on the Italian political crisis, because after the UK has already left, there's not a lot of strong economies in the European Union, because countries like Italy, countries like Spain, countries like Portugal, Greece, they're not strong economies. They're not very heavily reliant on growth in a similar way that we see for France, for Germany, for the UK, and other big economies in the world. So traders, that's just my analysis explaining our trade. Hope that makes sense. Hope you now understand the euro, where it's been trading, and hopefully we can make some profits off this trade. Thank you.